Hello, America, and welcome back to another episode of the Market Stretch. Today, coming out of Sacramento, California, my name is Max Drew, CPA, and I'm happy to talk with you a little bit about what I like to call the yoga of investments. In this brief talk today, we're going to talk a little bit about it's May 16th. We're going to take a look at how the markets have been doing during the week, and it's for the investor who likes to keep on top of what's happening in the markets, but maybe we don't want to watch the news every day because it makes us a little bit anxious. But on the other hand, we don't want to totally not know what's going on in the markets. So this is my way of checking in with the markets once a week to see how we've been doing in the 1 day, the 5 day, the 1 month, and the 1 year. In the three major indexes, if you may recall, are the Dow Jones, otherwise known as the Dow 30. The other major index is the S&P 500. Can you guess how many stocks are in the S&P 500? 500 of America's largest market cap stocks. And the last index I like to keep a look at is one of the fastest growing indexes right now, which is the NASDAQ 100, and which is the NASDAQ is the second largest exchange, second to the New York Stock Exchange, and it's the largest 100 stocks, excluding the financial stocks, traded on the NASDAQ, and that's been around since about 1984. The S&P came around in about 1957, and I believe the Dow Jones actually came about around 1887. So thanks for joining me today. We're going to take a little bit of a look on how the indexes have been holding up this week. And towards the end, we'll take a look at some different factors in the markets that have been affecting some stories that we can look at that may have been affecting the markets. So in the Dow Jones, the last 1 day, it's actually down 1.07%. Now, for context, imagine you had $100 in the index and it went down 1.07%. Well, that means that you would be down to $98.93. You just lost $1.07. So remember, there are going to be days in the market where the market's going to go down and other days where the market's going to go up. Historically, we've had a lot more up days than we have had down days. And overall, the wisdom of the market is it's not timing the market, but it's time in the market, which allows you to grow your money and grow your finances over time. Today, the Dow is down about 1.07%. All right, Chicken Little, I hope you don't run and sell everything today just because it's down 1.07%. But let's take a look at the 5 days. The 5 day, we're actually down 0.05%. So that means over the last week, you would have lost about a nickel if you had $100 invested. So what that means is 5 days ago, it was down less than it was for the last day. All right, let's take a look at the last 1 month in the Dow, see how things are doing. In the last 1 month, it's actually been up 1.95%. So even though it was down today, overall, it's been up about $1.95 if you had that hypothetical $100 invested in the market. All right, over the 6 month, up 6.3%. Not too bad for 6 months, about 1% a month. Been tracking in the Dow. In the 1 year, it's up 16.11%. Well, that's not too bad considering that the average stock market return a lot of people reflect on, they seem to be shooting for about 8%. So at 16%, this would mean year to date from May 16th last year to May 15th this year, you would have had about 16% growth, about 2 years worth of growth over the last 1 year, if you think about it that way. Now remember, a large part of the S&P 500 is actually made up of the Dow Jones. What do they have in common? Well, the 30 stocks that make up the Dow actually make up about 30% of the S&P 500. So S&P 500 over the last 1 day, down 1.24%. Over the last 5 days, up 0.31%. That means you would have made 31 cents if you had that hypothetical $100 invested. Over the last 1 month, 5.22%. So $5.22 if you had that $100 invested in there. Over the 6 months, 11.03%. Okay, at 8%, that's almost a year and a half's worth of growth. And over the last 1 year, we're seeing an amazing 24.34%. So if you were in the stock market over the last year, you would have made about 3 times the average return that most investors expect from the stock market at 24.34%. So it's a good time to have been in the S&P 500. Finally, we're going to take a look at the NASDAQ, which the NASDAQ you might think of as being a little bit more tech flavored, tech heavy. It did start in 1984 after the boom of the personal computer. We are looking at stocks outside of the banking and finance industry. So eliminate those, which make up about 20% of the U.S. economy. It gets filled in by a little bit more of the tech, which has been booming kind of recently. So let's take a look at how the NASDAQ 100 has been performing for us during this weekly market stretch. Okay, the 1 day, it's actually down 1.54%. The 5 day, down 0.21% over the last 1 month, up an amazing 10.6%. Wow, so that would have been like over a year's worth of growth just in 1 month. And the 6 month, up 17.44%. Would you believe it? That's over 2 years of growth showing up in a 6-month period. Let's take a look at the 1 year. The 1 year has done about double what the 6 month has done at 35.92%. If we're expecting about 8% a year, that's about 4.5 years worth of growth, because 4 times 8 is 32. Another 4% would get you to 36%. That's about 4.5 years of growth in a 1 year period. So I hope that you have been participating in the upside of the market over this past year. If you would like help analyzing your portfolio to see how you're doing, feel free to hit me up for a free consultation. Always happy to help you understand your portfolio and your investments. Moving on to some different news, things that have been driving the headline. As we saw in the NASDAQ 100, tech is up, and one of the more important things in the tech world right now is AI, and some people are looking to hardware, not just software, to increase our computing power. So there's a company right now called Cerebrus. Kind of reminds me of the X-Men with Cerebro. I think that's what Professor X puts on his head to be able to scan the world and see what all the mutants are thinking. But anyway, Cerebrus is this company that has been highly involved in the AI markets. Apparently, OpenAI is interested in working with them. One of the biggest ones is, Elon Musk was talking about Cerebrus. And also, maybe one of the more serious offers tends to be by Jeff Bezos, I believe, from Amazon Web Services. They're looking to cut a deal. So this is looking to be about a $48.8 billion valuation for the company is what they're looking at, possibly up to that. IPO just took place on May 14th. So you might want to research the headlines if you're interested in those sorts of things. It might be a company that if you like picking single stocks, you might be interested in taking a look at that company. Not that I'm recommending it, but it's one of the things that are hot in the market right now. Another thing that's on a lot of people's mind, oil prices looks like it's topped $100 per barrel. So things are going up again. And it looks like we're still waiting for some sort of a deal to be cut with Iran. However, you might have heard that President Trump has visited China and is talking to President Xi, and it looks like there's some very positive outcomes regarding China beginning to promise to do some oil import from the U.S. and some different investments. So the China deal is going good. Of course, China is one of the top countries most reliant on the Iranian oil. It looks like they're looking to make an alliance with the U.S. in spite of the fact that the oil supply and their major oil supplier is being cut down due to the U.S. and Iran conflict. Sacramento, how does this affect me? Well, I'm just Googling Sacramento gas prices, and it looks like the average gas price in Sacramento is currently $4.49 a gallon for regular, $5.44 for premium, and $5.63 for diesel. That's the gas average that we're seeing right now in Sacramento. Over the last year, the Consumer Price Index, CPI, is telling us that the prices have gone up about 3.8%. Okay, I don't know if that sounds right to you or not, but but it seems like to me the prices have been going up an awful lot more than 3.8%. Just one analogy, my gardener a while back was charging me, I think it was around $100 a month to do my garden. Then it went to about $120, and then this year it went up to about $140. So I've seen a 40% increase over the last 3 years in my gardening services. How about you guys? Are you noticing something like that yourselves? I tend to suspect that this consumer price index, at least for California, might be stated a little bit on the low side because aside from the price of housing, everything else seems to be going up quite a bit. All right, let's take a look at the next thing here. We got a new Fed chairman being sworn in. So looks like the Walsh era has started. They confirmed Kevin Walsh, and he's going to go ahead and be entering in. A lot of people say that he has been endorsed by President Trump. Of course, we know President Trump would like to keep prices down, would like to bring down insurance. He always believes that we should have the lowest interest rates of any country, but Walsh has claimed that he's going to remain independent. So we'll see if monetary policy actually does stay similar to what it has been, or if we'll see significant change in monetary policy, possibly with the lowering of the interest rate, if follows some of the predictions from some of the analysts who believe that he's going to act according to what Donald Trump is pushing for, which is those lower interest rates. Okay, one thing to watch out for, along with, my take on consumer price index, wholesale inflation has jumped to 6% in April based on an annual basis, the biggest increase since 2022. I think wholesale inflation might be one of those leading things when it comes to the consumer price index. Generally speaking, whenever price increases take place, they're going to get passed on to the consumer. So wholesale will go first, then we'll see the price increase follow to retail. So that's the market stretch for right now. Stock market has been up tremendously over the last year. Also, prices are going up. Changes in the world between the U.S. and its major allies and antagonists seem to be changing, and we're seeing more and more revealed on a month-by-month basis. I won't get into all that because that's a whole big can of worms, but some of the things that we touched on today, I hope that you have an awesome rest of your week. Thank you for joining me for the yoga of investment this week. Looking forward to catching up with you more next week. Have an awesome rest of your day. Take care. Bye-bye.
Follow, message us, or scan the QR code on the screen to learn more.